give any insight or any just thoughts or commentary on, rates just seem like they keep going up. We don't know how that's going to play out, when it'll stall, drop.
Yeah.
Since you now see both sides of, like, the rate side, the banking side, the lending side, and now like the transition and ownership side, any thoughts or commentary on just what's going on right now and how that feels and plays out for everyone in the market?
Yeah. So rates are interesting right now. I mean, a lot of banks like to price off of the 10-year treasury.
Mm,
And so whatever that's doing, you can pretty much expect some spread above that for your loan rate on a 10-year loan. So 10-year treasury, most dental loans are 10 years. If you go 15 or 20, it's gonna change that. But the 10-year treasury just hit a recent high. It peaked above 5% and it's gone down just a teeny bit, but then it's been right in that territory in the last few days.
mm,
Um, my experience is that 10-year loans, we're buying an asset. Dental practice is an asset that makes money.
mm-hmm.
And on a 10-year loan, such a short amortization, a move in rates, even though it's a dramatic move that we've seen over the last couple of years, down to near zero, which near zero, when they say zero rates, I mean, it's really, the lowest it effectively gets is like 2.5 or 3% on a dental
Yeah.
loan, right? Like that's the
Yeah.
lowest we saw it.
Yeah.
And so the move up to now we're in the sixes, maybe some are going to start seeing sevens soon with the recent move in the 10-year. Um, I spoke with somebody yesterday. They said, "Oh man, I don't know if I want to buy it." It's like it doesn't really, for a business owner, it doesn't make that big of a difference on a 10-year loan.
Mm-hmm.
Even though if you're borrowing $1 million, 10-year loan, and you look at that difference in rates, yeah, it's more money you're going to spend in interest expense, but it's not crippling. You can still
Yeah.
buy something. You can
Yeah.
still take action. And if you were to look at the housing market or other sectors, right, it's more crippling to people financing on a much longer term amortization, and
Mm-hmm.
especially with an asset that doesn't make them money.